No matter how you analyze that Friday report, the jobs of some bankers could be in jeopardy. It's connected with rising interest rates on mortgages. The higher they go, the more likely those bankers could get pink slips. Kayla Tausche explains.
For the last 2 years, consumers left and right were rushing to refinance their mortgages. Rising home prices made it easy. Low rates made it attractive. Government programs, in some cases, made it possible. Jobs followed suit. The mortgage banking industry grew 10% in 2012 alone. As the refinancing boom slows now, that number's being right-sized too.
There was a fairly sizable refi boom, and that refi boom is slowing down somewhat, which means that you will be letting some people go.
For one example, J.P. Morgan, the largest U.S. bank by assets, has outlined a round of up to 15,000 layoffs in its mortgage banking unit alone, to be completed by 2014. The bulk of those layoffs will center around the servicing of bad loans as credit gets better. But sources say now a fraction of that will focus on origination too. As rates on a 30-year fixed mortgage hit their highest point in a year, applications to refinance fell 15%. Applications to purchase down 1.6%. Still, some like Bank of America are betting on more home purchases, adding loan officers and branches to get that business. Wells Fargo taking a similar tack.
The purchase money business will become a bigger part of the business. It might be overall less. If it's less, we also have figured out how to adjust our cost structure.
Franklin Codell, head of mortgage production at Wells Fargo, says being flexible is key. Wells Fargo's loan officers are paid on commission and tend to quit when business is slow. The bank's interim mortgage processors handle booms but understand their jobs will be cut in a bust. Codell says strong underwriters are always in demand, but even they are vulnerable if the market falls off a cliff. That cliff could yet be ahead. Mike Fratantoni, vice president at the Mortgage Bankers Association, forecasts the mortgage market will keep shrinking to $1.1 trillion in 2014 from $1.7 trillion last year. For Nightly Business Report, I'm Kayla Tausche.